Welcome back, dear learners. Before the ad break, we were doing some adjustments and then we're preparing the post-adjustment trial balance. Let us now look at adjustment number 3. It reads, an EFT for 500 received on 28 February from a debtor whose account had previously been written off, had not been entered in the books. So this is received from a debtor whose account had previously been written off. Here is our bank, and the moment you see bank on the credit side, that means your bank is unfavorable. That means unfavorable. That means we have what we call a bank overdraft. Once your bank is on the credit side, it's a bank overdraft. Now, the moment we receive 500, when bank has a credit balance, that is a negative balance. And the moment we receive money, we debit our bank account. That means we are decreasing that bank overdraft in this case. We therefore come to the post-adjustment trial balance, and you will see that my bank balance is now 48,460. How did I get that? I said 48,960 minus the 500. Or you could simply say minus 48,960 plus 500. That gives you a negative bank balance of 48,460. Hence, you see it on the credit side. But when we receive money from a debtor whose account was previously written off, we call it bad debts recovered. And we record it on the credit side of our nominal account section because this is considered income for the business. Very important. Let me repeat that again. When we receive money from a debtor whose account was previously written off, we will record that amount in the nominal account section on the credit side because it is income to the business. Have you noticed that when I did these entries, I did not touch the debtor's control? Why did I not touch debtor's control? Because bad debts recovered do not affect your debtor's control. Keep that in mind. Adjustment number 4 then reads, insurance includes a premium of 3,600 paid on 30 June each year. So what we have here is the insurance amount of 11,200. Our financial year is ending in February, and if it ends in February, that simply means it began in March. So what I'm going to now say is from the 1st of March, it ends on the 28th of February. Now we have a premium of 3.6 paid on 30 June each year. So if it's paid on 30 June each year, I can also consider this to be the 1st of July. All right, 30 June, I can also consider it to be the 1st of July. And then if it's paid on the 30th of June or the 1st of July each year, the end for this year, because it includes a premium, and then that premium which is for the year, it would therefore end on the 31st of June, on the 30th of June. It will end on the 30th of June. Therefore, this will give us 12 months here. I'll repeat again. Our financial year begins on the 1st of March. It ends on the 28th of February. Then, on the 30th of June, which you can also consider to be the 1st of July, there is an annual premium of 3,600 which is made. If it's made on the 30th of June, which you can consider to be the 1st of July, it will therefore end in the next financial year on the 30th of June. So we want to see how many months we paid in advance. So you're counting your March, April, May, and then June. That gives you 4 months that we paid in advance. So if it was 4 months paid in advance over the 12, you multiply that by 3,600. That will give you 1,200. The 1,200 therefore becomes an expense that was paid in advance, an expense that we paid in advance. When we come here then, we then say prepaid expense, we're debiting it in the general journal. And then insurance, 1,200, all right? Prepaid expense. Now, when we then come, we are now saying in the post-adjustment trial balance, on the debit side, we have our prepaid expense. We debit it because remember, it will be shown under your current assets. So it comes under the balance sheet account section, prepaid expenses, 1,200. And then under the nominal account section, you have insurance. So what we did here is we had the 11,200, but 1,200 was for the next financial period, as you can see here, this 4 months here. So we will subtract it, which is 1,200. Then we end up with 10,000. That is what your post-adjustment trial balance would then look like. Let us look at the next adjustment. Number 5, it reads, part of the premises is being rented out at 2,000 per month. If part of the premises is being rented out at 2,000 rands per month, we would expect that the 2,000 rands per month multiplied by 12 months, that will give us 24,000 rands. 24,000 rands. When we come into our nominal account section, we find rent income 18,000. That means there is an amount that we have not yet received. And we get that amount by saying 24,000 minus 18,000. And the difference therefore becomes 6,000. We therefore come here and we consider that amount to be accrued income. Income that we have not yet received. So we debit it, accrued income, and then we credit our rent income. When we come to the post-adjustment trial balance, we therefore say accrued income under the balance sheet account section, because this is still to be received by the business. It is receivable to the business. So we put it under the balance sheet account section as accrued income. And then under the nominal account section, we then come and say rent income. We had recorded 18,000. However, there is still amount that we must receive, which is 6,000. That is why you see we end up now with 24,000. Once you have completed this, you then see how your post-adjustment trial balance will then look like, where all your amounts are then put in. Dear learners, thank you so much for joining me in today's class, and I hope to see you again soon. It is goodbye.